Living as a U.S. citizen outside of the United States is at best difficult and at worst impossible. This is a statement I read on the IRS website. The IRS is aware that some U.S. taxpayers living abroad have failed to timely file U.S. federal income tax returns or reports of foreign bank and financial accounts. American taxpayers are required to file delinquent tax returns with appropriate related information returns for the past 3 years and to file delinquent foreign bank and financial accounts for the past 6 years. All submissions will be reviewed, but the intensity of review will vary according to the level of compliance risk presented by the submission. The review could be expedited by the IRS and will not assert penalties or pursue follow-up actions, or they could be subject to a more thorough review and possibly a full examination. Tax, interest, and penalties, if appropriate, will be imposed in accordance with U.S. federal tax laws based on a review of the submission. As a U.S. citizen, you are taxed in the same way and according to the same rules as U.S. citizens who live in the U.S. It is important to understand that the U.S. tax system is almost the exact opposite of Canada's tax system, mainly because retirement planning in Canada is based on the principle of tax deferral through the use of an RRSP or tax-free savings account. The U.S. tax system is designed to attack tax deferral and will severely punish you if you invest in these things. The U.S. tax system operates on the basic principle that if something is foreign, it should be punished. Under no circumstances should a U.S. citizen living in Canada or a Canadian married to a U.S. citizen invest in a tax-free savings account. The reporting costs and potential for penalties for investing in a TFSA are so extreme that you should run. TFSAs are only recognized as foreign trusts. As a trust, Form 3520A is supposed to be filed by March 15th. Then, Form 3520 when you file your U.S. income tax. Just adding the income to your income tax is not what they want. The IRS fine for not filing these forms is $10,000 or 35% of the account. Next, any dual or U.S. citizen living in Canada who has opened up an RESP must also file the same forms. Unlike RRSPs, RESPs are recognized as a foreign trust and are also taxed by the IRS. Many will see the difficulties as being too great, too time-consuming, and too expensive, and will renounce their U.S. citizenship. Canada only taxes by residency. The U.S. taxes by birth. Once a citizen, always a citizen. You pay tax no matter where you reside. If you want to give up your citizenship, you have to pay all taxes that are deemed to owe. This means if you own a business or a home, you have to pay taxes on unrealized capital gains on them to be free. Who could have known all of this? U.S. citizens and those married or in a common law relationship with a U.S. citizen should stay away from any Canadian investment plans and make sure you get advice from a professional who has international planning experience. Although an RRSP is a foreign trust, they are covered by a special arrangement. First, the IRS does not require the 3520 for RRSPs, but Form 8891 is required every year to ensure the income from your RSP does not have to be included on your U.S. tax return. The news doesn't get any better if you were to look at Canadian mutual funds and home ownership. Oh, and by the way, beginning January 1st, 2014, the Foreign Account Tax Compliance Act will require banks, insurance companies, investment firms, credit unions, all to collect and report certain information on accounts held by U.S. persons to the IRS. Thankfully, there are experts who can help guide you through what needs to be accomplished. And if you're interested in finding out more, contact us today.